So our next option for primary residence non-traditional loans is a P&L loan. What a P&L loan is your CPA or enrolled agent who's licensed prepares a profit and loss statement based on your business. Some lenders are going to require 1 year. Some lenders are going to require 2 years. Some lenders also require bank statements along with that. Some lenders don't. It can go down to a 580 FICO score, but you're better going 680 or above. The lower the FICO score, the more money you're going to have to put down. These P&L loans can be anywhere between 10% to 25% down plus your closing costs. Some of these lenders will allow seller concessions, usually 3%. Very few of them are actually going to go higher than that. So do be prepared that you're going to have your down payment money and your cash to close is going to be needed as well. There are no down payment assistance programs on these, but they do help you if you are self-employed and you've been told that your traditional routes of financing aren't going to work for you. Even if you're not in Pennsylvania, New Jersey, Delaware, Maryland, Virginia, or Florida, I have coworkers in every state with the exception of New York and Massachusetts who have access to these loans. There's always a solution for you. Also take note that sometimes they're going to have a lower debt to income ratio. They can be as low as 40%. Some of them go all the way up to 55% debt to income ratio, and this is the total debt to income ratio. But it's going to go based off your P&L. One of the hard parts about this is having a CPA that you had a long-standing relationship with, because a lot of your newer CPAs, you're not going to get a P&L that's signed by somebody at H&R Block. That's not going to happen. You need a qualified enrolled agent or CPA who is willing to fill out a P&L for you based upon your business. And because that CPA or enrolled rate agent is putting their license on the line, they're going to want to make sure that they feel comfortable with the figures that they're giving because it's going in a contract that holds them liable. So keep that in mind. There is such a thing as a P&L statement if you are self-employed. Some of them still also require bank statements. They can be 1 or 2 months. Some of them just require the first page of the bank statements for 1 or 2 months. Some of them require a whole entire statement, all pages, even the blank ones. But there are solutions. If you want to buy a home and you've been told you don't qualify because you're self-employed, I guarantee you there's a solution out there.
Back when I didn't know about the law of attraction, when my room was a flow in the mattress, my mind stayed